Okay, I'm going to go through an analysis of ES and how I would go about analyzing it and coming to a conclusion, if any, right? Okay, let's start on, you know, maybe on the weekly. Okay, ES is at all-time highs. Seeing a monthly candle like that, it provides no value. Obviously, it came all the way up and got rejected for now, but there's still 20 days for this month. So there's not much value in terms of that, right? We do have a monthly order block down here. And things I also consider are the wicks. Okay. So the wicks, you also mark consequent encroachment of there. I would take, if I'm taking a short, I would definitely take partials there, right? But I'm not going to take a short just based off of this monthly time frame. Okay, we got this nice order block, but such a bullish close and an up move first. We'll see, right? We'll see. Go down to the 3 week. Okay, we've been quite efficient up until here. 2 week. Okay, 2 week. We have this order block here. Um, yeah, preferably if I'm calling an order block, I want a green candle. I want the body to close above. It's pretty close, but to be honest, in this case, there's so much equal lows here that I may not feel comfortable taking that just based on this time frame, right? Just based on this time frame. But I do like the equal lows down here, back at 5, 7. And if we go to the 1 week, okay, we had this general order block and then another order block created, not in one candles, but now we're here on the weekly. So on the weekly, we have this volume imbalance down here and a gap. ICT normally would, I believe, encompass the entire area. If there's a gap and a volume imbalance, he would just encompass the entire this entire area, or maybe even the bodies. I'm not sure up until the body, but let's just say something like that. Okay, it's the weekly. Um, this weekly is so close to here. This is a lightly drawn liquidity right now, I believe. Um, we have 2 days until the end of the week, so it's likely going to come down there. Give me a second. No, okay. All right. So we can look for clues on the lower time frame to get us to that area from here, there to there. Even if you took a trade right now, that'd be 18 pips. Obviously, it's really close. We have to go look at the lower time frames. Okay, so I'm just looking at the next target. I'm not looking down here. Okay, I want price to get down here. Yes. Maybe if we get a weekly close down here, then we can see that as an inversion gap and then trade, for example, a weekly close. Okay, inversion gap, then we can trade down here, as I'll show you in a minute on the daily, which was very nice. Let me annotate this. Let's call it a busy 1 week. Okay, that's how I annotate it. Now we work our way down. I'm starting from the 4 day because 7 days is obviously 1 week, but there's also, futures. I'm not sure how many trading days. Forex, okay, you got 5, right? So, and the 5 days generally looks the same as the 1 week because it resets on the week. All right. 4 day. Interesting. Okay, I'm just gonna hide this now on the daily chart. So we have this 4 day gap here. Okay, and we recently just came into that. It's small volume imbalance here as well, and just this overlapping general breaker. So we could be moving higher from here. It's completely possible. So 3 days. There's a 3-day gap down here. Okay, but it's quite deep. It's quite deep down there. If I'm going to take a short, a long-term short, I want to see premium arrays be created, such as a premium gap, premium order block on such time frames. Okay, not time frames too low, because then it's too low. It's irrelevant. But if you slowly work your way down, like a weekly, let's say you see a weekly drawn liquidity, then you see a 1-day, 2-day, 3-day SIBI be created, or bearish order block or breaker, then you can safely start to go down and have protected stop losses, areas that it's not likely going to go to, unless on those lower time frames you see discount arrays, and then those can just be targets, right? If you want to short. Let's see what this was. Okay, let's work our way down again. 2-day. Okay, you can see here on the 2-day we have an inversion gap as well, to make it a slightly different color for us at the moment. Excuse me. And 1-day. Okay, move this here first. What was this? I can't remember. What was that? Was that a weekly gap? No. 5-day? 4-day? 4-day gap, right? Okay. Okay. So 4-day gap. All right. Very nice. So this could be a trade. Okay. When this candle closed like this, I was very interested in. I'm not sure if we mentioned it on the video or not, but this inversion gap here, inversion iFVG on the daily. This is nice. I like closes like this, very close to gaps, right? You like closes of candles that are close to gaps, then slightly going to trade into that gap. Okay, because it's so far away from a gap, you can get a retracement back into a gap, but not in the next candle. If you're on the daily and you get such a deep close, it's likely not going to trade. It may encounter other opposing PD arrays. It may encounter other premium arrays if you're shorting before it gets all the way. That's why I have two views. One, PD arrays in terms of anticipating the next candle, and two, in terms of structure, like a refined POI. So let's say you had a gap here and it didn't get traded into the next candle. Okay, then you got to wait days and days, and then you may get a retracement back here, and then another leg down, and it could be at a OTE equilibrium of that range, etc. So you're just left waiting. So you got to wait a number of days. You can wait for that moment, but it may not happen, and it may have reached a discount array. But usually at that point, after many daily candles have formed, I'm going to the weekly. I'm going to the 2-week. Is there a PD array in the previous candles, right? Is the previous candle a PD array, like a gap or an order block? Okay. So let's do this on the daily, right? There's a fair value gap here, inversion gap. In this case, I can cut through a number of candles. It doesn't it can't be the previous candle, because it's impossible, right? Because it's an inversion gap. So it has to be a few candles away. This one's ideal. So we had this move up. Some manipulation, seek and destroy once, seek and destroy twice, and then big drop down. Great. This is the next PD array on that candle. And where can we trade it? Down here into a higher time frame PD array, which is a 4-day down here, right? Example of a short. This would be, let's say you do a short like this, and without going to a lower time frame, say, okay, at this high should be relatively safe. It shouldn't, it has to cut. It has to go through this inversion gap. It has to go through this wick. It has to go through this body. Unless price is setting up for another move up, then okay, maybe it makes more equal highs. Or maybe it's a very high impact news where the wicks are going to do a lot more damage. But in most cases, inversion gaps like this, they get traded into a little bit and then, off to the races to the next PD array. Okay, so let's say you didn't do a refined entry. You just say, okay, my limit's here, my stop loss is here. You want to be super safe, just put it here. That swing high, target entrance of this gap, right? In the event you get tapped into there and then it reverses back up. So this is the safest thing. Safest way that doesn't require a lower time frame entry. All right. And I was waiting for it during London actually to come into the gap, but it didn't. Still consolidated, and obviously evening times during New York for me, I am occupied with children. So let's go to the 1 hour. See what happened. Okay, we're down here. I said that looked nice. Yeah, I think I did point that out to you. Okay. So we're going on to 7 a.m., 7 p.m. Okay. Okay, this is going into London. And we get a 4 o'clock reversal. London likes to reverse during 3 or 4, at least for Euro. Okay, we get a tap into here, and then a small rejection. Let's go down to the 15-minute, have a look. Yeah, like I said, why I think, did I have this here? So this should be safe, right? Because there was a 45-minute, or there was an hourly gap and this thick order block on steroids, right? It's like double layered. So I like bodies that look like this. I also use bodies as sorry, buy side liquidity. These are clean bodies here. Sometimes I use that as buy side liquidity for some reason. Seems to work, but this came into a gap. Order flow is bearish. Inversion gap. We're not doing that. We're not looking for that. It may go up there. I'm not sure, but let's start on the 15-minute and see when we could get a trade. So this is going into 7 a.m. Yeah. So here you can utilize kill zone tendencies, weekday tendencies for your trade, right? The stock market open 9:30, New York kill zone, things like that, right? That you may be more familiar with. Okay. I like to go to the 30-minute, less candles. Okay. So what do we see? It's 30-minute gap. Tap into here. This is a refined area. So let's say, for example, you're looking for a refined POI to take a short, right? Based on this inversion gap. It has to come into the inversion gap. That's the rules. And there's one here as well. So here. Okay. Okay. So the power of 3, accumulation, manipulation, distribution. Looks like that, right? Power tree candle, but there's always a fractal manipulation in there. So you may get something like this. In terms of a power tree, or even more fine. So there's always one manipulation first. The people that are jumping into this move, FOMOing into this move down, they get wrecked. The next move down is likely going to be the real move. Okay. Down and a big retracement. 9:30, right? Opening bell 9:30. Let's see if we go up or we just melt away from here. Okay. Could we go? We could go down to a lower time frame. Okay. So the block inversion gap here. 5 minute. Okay, choppy. Okay, set that high. Okay, good. Now let's go back to the 30-minute. We came back up to that high, into this inversion gap, and then so manipulation, one more time, and now let's see. This should be it. But yeah, let's go down to the 15-minute. Okay, so I like this on the 15-minute. All right, this may be an example of a refined entry. Market buy here. Market sell, market short, and we write it down here. We can take profits here. First area of external range liquidity for this daily. Okay, the daily candle close here. First target, highest probability target. Okay, second target, a higher time frame PD array, which is the 4-day. Okay, so let's see. I'm not going to put a limit up here. Cutting, what do you call it? Splitting hairs. It's a small difference. So yeah, let's see if this works out. Okay, this is how you can follow price as well. Look, you can monitor this as well, and this is how I may trail my position. Like I said, increase my position size but decrease my risk by trailing my stop loss here, and I'm in a bigger position, and now I'm really refined in the trade because I've been following it, right? And if you're doing that, then if you're doing that, then you're one of the few people that are doing that, because everyone has a different type of strategy. Okay. All right, came all the way up here into this. You see the small gap? Okay, let me remove this. This was a 30-minute. Remove it. Volume imbalance, small gap down there. Okay, so came back to, like I said, when the structure being created, we can often expect to come back to a premium zone. Okay, I would trail my stop here if this low, if this low broke. Okay, but this closed very high and the wick up here. Not trailing the stop there yet. Let's go to a higher time frame and see what is there. Okay, nothing on the 1 hour. How about the 45 minutes? Okay, 45-minute. No gap. I like to see a gap. 30-minute. Okay. You see this 30-minute CB? Right. Okay. That's probably what that was. Okay, one more CB here. Sorry, the colors are a bit the same. If you can see it. Okay. Inversion. It's like a breaker. It's okay, don't worry about that. Just take note of that 30-minute gap. Are the bodies respecting it? Bodies are respecting it. And we melt away from there. Okay. No, I thought that would be a nice close. Okay, still closing. And all right, hit the target. That's it. That's when you kind of get out of the trade, right? Because you don't want to deal with a reversal, right? Because you have to keep on considering what higher time frame things are. A trade is a trade. It's a trade. Does that make any sense? A trade is one specific idea going from point A to point B. It's not thinking about, oh, what if I hold this longer? Can I make more profit? What if it goes there? That looks like a good draw on liquidity. I'll just trail my stop loss. And it is best to have a trade idea and execute that trade idea, and not trying to do more. That's not the trade, because you just get into this bad habit of trying to do things that It's not part of your system, not part of your strategy, not even part of your analysis, even if you're very discretionary, right? This was the idea. Inversion gap to here. This would be a refined entry going to that area. Okay, let me just take out the replay tool, see where we are. And we're here now. Now we're here. Okay, so there's nothing here. There's nothing here right now. You don't always have to feel like, yeah, I gotta find a trade. Where's the trade? Where is it? What's the trade? Where does it look like it's going from here? Oh, look, I see a the value gap. Looks like it's holding a displacement, a market structure shift. I'm gonna ride it to this. You know, if you do it this way, planning out the candles. Look, it's just this is it. This is how you have a daily bias, right? What's the next candle likely going to do? You look at PD arrays like this, and you're golden. So okay, let's go look at the 2-day again. Remove all this. It was a very nice one. Very nice trade. I don't watch Euro. I don't watch. Yes, but that was very nice. Maybe I should. So there's a 2-day gap, inversion gap out here. Okay, and volume imbalance here. There's a lot of them, so I don't know how reliable they are in terms of a PD array. Gap here, gap there. Here's it's not a gap, but it's an overlap. So remove this. There's a small 2-day gap in here, really tiny. So some reaction from that. We could get a deeper retracement and then down, right? So if you're holding a position like, let's say that 1-day idea inversion fair value gap, you gotta refer to the higher time frame. Is this worth holding? Which time frame? Next candle is going to be in effect now. What's possible? So on the daily is that. Quite a displacement down. Okay, so maybe one more. Gotta see if we create another gap. On the 4-day, and the 4-day was this one. Okay, I'd be interested in cutting through some candles like this wick, the volume imbalance down here. I'm not trying to, the trade was done. Trade was done. I'm not saying like, oh, is price going to go next? Because I don't know. And obviously it's at all-time highs. Okay, on the 4-day, we did have this nice gap and price respecting mean threshold, consequent encroachment, close, up, higher. So I don't know. Maybe we go higher. 1 day, 17 hours for this to close. Some volume balance in there. So when more structure gets created and I'm shorting, or longing, okay, I look at where 50% here, right? And OTE 62, 70.5, and 79 would be the OTE levels. So those can be targets once structure is formed. Yeah, higher time frame targets. But don't forget, if you got it on a really low time frame, this is on the daily, and it's going to be maybe multiple days before possibly coming down here. And you're translating to 2-day time frames, more 3-day candles, 4-day candle, a weekly candle, maybe a 2-week candle, maybe a monthly candle. You just got to consider all those things. Take note of what news events are coming up, and then you do this on other assets, other correlated assets, right? I guess you don't have to do individual stocks, but like the DXY, commodities, gold. If just those are some extra studies that you can do. What is correlated and what moves together, right? It's not going to be retail logic because there's a correlation. Things are moving. Sorry, bit of a cough. Things are moving together, so these are things you can study. What tends to move together? What assets tend to move together? Oil tends to move with the Canadian dollar, I believe. Gold. So these are extra studies, and I know it makes things slightly more complicated than having to look at a chart, but it's easy to, when such the money possibilities are on the line. It's not that much more work compared to either slaving away your whole life at a 9 to 5, or having to study to be or get an experience to be a neurosurgeon or a CEO type of employee. It's not that much work. Just learning, what's correlated with what. Okay, and you know, trading is about the long term view, compounding your gains, and risk management, and surviving. Okay, surviving is the number one thing, and scaling that way. Okay, so I think that's it for this video. Yeah, I hope you found it useful. And if I spot anything else on ES, we'll have a look. So just keep a note, there's a 2-day here, but there's also a 2-day imbalance here. Okay, we just had a new 2-day candle. It's a great time to observe. Do we come into here? And if we come into there, this volume imbalance, maybe even there, what can we see a move lower? Is it indicating move lower? So we go down lower time frame. Let's say 8 hours, right? Divided by 4. Oh, wow, nice. 8 hours. We have this breaker here. Okay. Okay, let's just call it the entire order block. Over here with a gap. It's nice too. Like I said, you gotta be careful of discount arrays when there's premium arrays. So we got a 4-day discount here. This is an 8-hour premium arrays. So it's respecting this whole big move, which was on the daily. Okay, it's not too far from the 2-day. And we have this for continuation lower. So yeah, when price 8 hours closes in 1 hour, you have an 8-hour gap here. If we trade into there, if we hang around here, most likely we're gonna trade into there. I mentioned how to look for a possible breakaway gap on a singular candle anticipation basis. If it hangs around here, most likely it's going to come into the gap, and we can step on a fib. Where is the OTE? Things like that. Up there we got a volume imbalance there, and now we go to the lower time frame for a refined entry. We have a 4-hour here, 4-hour here, 2-hour, 1 hour. So now I'm looking for liquidity pools, stuff like that, equal highs. Okay, let's go to the 12-minute. Okay, we're lingering around. We could come up again. Could we come even higher into a 2-day? I don't know. I'm not too familiar with how this puppy moves, but we may get a higher move into this 8-hour gap here, and this 2-day volume imbalance over here. And don't forget, we got this 2-day. Was it 2-day? No, the 8-hour order block with the gap here. Okay, so we could trade up to that and then leave. And then you just time it with your normal trading times, right? And this S&P, most of the time I find it, just based on my recent look at it, it usually makes its move during the opening bell and stuff. So you can just look at this move here. Drops down, pump up, and then probably some news yesterday I'm not really aware of, and bit of seek and destroy, and then comes down, right? Anyone chasing is wrecked. For one, even on this time frame, not many PD arrays. You're wrecked if you're trying to catch this one down so quickly, and it just chops because there's news coming. I believe there was news, most probably. Chop, chop, chop. Then we get a nice one on the, I forgot whatever time frames I just talked about in the video. Okay, all right. Went on for long enough. See you.